Yeah,
I
I
got
hear
you.
you.
I got you. Okay. All right. How was your Christmas and New Year?
It was good. It was good. I spent most of I was over at Corey's house, not during New Year's because I had to work,
Right.
but Christmas, yeah, I went to Corey's house. It
I
was
got you.
fun.
I got you.
Yeah,
That's dope, bro. Um,
yes, sir.
I guess before we get into this, what is something that you like? Hey, I want to go over this before it all, like before we get off this call or whatever. I want to go over X, Y, and Z. Is there anything in particular, or you just want to go through the
Um,
just go through it all again?
so that first, I think it was EuroCAD. When you was telling me about the instead of going with the trend, we're gonna go like with the 4 hour and
Weekly.
the weekly.
Yeah.
But what I looked at, what I seen, I don't know if it was something different from your chart or whatever. But when I looked at it, it was like all of them was showing red, but I didn't know eventually it would change or whatever. You know what I'm saying? So that's why I was like, I got kind of confused about it, but I'm like, nah, let me just trust it because I know it's probably gonna go back up.
Yeah, yeah, and like JP, you got to look at trading like basketball or sport or baseball or whatever. Football as a quarterback, right? We're going to take our shot,
Mhm.
but we're not going to be 100% accurate, right? You're going to shoot the ball,
Yeah,
you're going to miss four shots in a row. Then you're going to make four shots in a row. You get what I'm saying? Like,
but
it's just part of
yeah,
it. At the end of the day, you're 50%, right? That's the whole idea of this. Uh, you just gotta, we got our plan, we got our strategy, we're gonna follow it regardless of the wins and the losses. We're gonna take the same trade, same setup every single time, and that's gonna allow you to uh, level up as far as the financial side of it. But
okay,
yeah, that's how you got to look at it. Is that this is a sport. So when you place a trade and you take a win, you just look at it like I just hit a jump shot. That's all that was a jump
yeah,
shot. The next jump
okay,
shot you may take may be a brick. You know, like you're still, you
yeah,
know what I'm saying? That's the whole
yes,
idea.
yeah.
Uh, okay, let me pull this up.
Did you need me to look this up? Or do the email on my computer, or how'd you need me to do that?
Oh, you're good. You're good.
Yeah, right here. Okay.
You're good. I'm just over EuroCAD, and then I'm over. I had told you originally, trade with the trend, which means
Hmm.
really trend direction that's in. We want the H4 to.
Okay.
This week, the week, I'm gonna break that down. Explain and is right. The weekly can be a trend. The daily can be a trend and trend. We're taking got two times going in the same direction.
Okay.
And I'm gonna show you on the computer or I'm gonna show you on the charts, and then I'm also draw it out on why everything is acting the way it's acting. So I think this
Okay.
this will really help you get a better understanding, and then just go over the same things until it becomes second nature. Let me
All
pull
right.
this up real quick, and then I'm gonna share. I'm gonna share. Hope I'm doing this right. Yeah, entire screen. All right, can you see? Can you see my screen?
Mm-hmm.
Okay, so I'm gonna start with EuroCAD because I've recently gotten back in this trade. But I'm gonna start from the top when we originally took the trade. Okay, so I start the time frames that we look at are the weekly, the daily, and the 4 hour. You are aware of that, right?
Yeah.
We have just been focusing you. I'm just making sure you're focused on the daily and the 4 hour and making sure they're okay.
Yeah.
So as we can see here, this is the weekly time frame. We can clearly see that we are in an uptrend, correct?
Mm-hmm.
So what we're having on the weekly, we had a pullback and a retest of this level. Is that clear? Like, can we clearly see? Like, oh, okay, it's no different than a retest on the H4 or daily. It's just the weekly time frame, which means every candlestick takes a week. It takes 7 days for it to form.
Okay. So once it goes, so even with when you said that retest is basically gonna go all the way down there to where the daily is, and then go back up.
Well, this is the it's you talking about this area right here that I have highlighted.
Yeah,
Yeah, I
yeah.
mean essentially, right? It didn't
Or
have to pull all the
it's
way back.
gonna, yeah, it's gonna do something.
Yeah, so it's
Okay.
the idea of it is when price goes up, at some point it has to come back, right? Price goes up, at some point it has to come back. And what we're getting is a retest, which is market structure, right? And then once we create a new
Hmm.
higher high and price drops below that last higher low, that's the structure, which you've done really well at. You understand structure because I can tell by the
Yeah.
videos that you send me. Hey, bro, we're in a uptrend on the H4, we're in a downtrend. You know, you've really
Yeah.
grasped that. You've done good at it. But if this structure, then we're in a downtrend. So what happens is price a lot of times retest right that area, and that's also where we know where price reacts at. We know where to put our support and resistance levels. Does that make sense?
Yeah.
Okay,
Yeah.
so all we're looking at is the weekly side of that. It's the weekly time frame. So that's what we're looking at. So we see the weeklies in an uptrend. So we got to take note that the weeklies in an uptrend. Okay, let's go to the daily. The daily is in a downtrend. We can clearly see that we're in a downtrend. Why is the daily in a downtrend? Well, because we went up so high on the weekly that we have to come retest. So what we're doing is we're retesting on the weekly.
Hmm.
You get what that makes
And you,
sense?
cause yeah, cause you said once it reaches to the highest, or where it's a higher high or whatever,
Yeah.
once it comes down, if it goes past that area, where the other downward area was, if it goes past it, then that means it's going down.
Yes, when we have that shift of structure, yes. Once it
Yeah.
goes
Yeah.
past the lower low or the higher low, whatever
Yeah.
the case may be, or the higher
Yeah.
high, whatever the case may be. But I'm gonna mark this real quick so we know for a fact that this point here is our higher low, and this other point is our higher high. We understand that this is the weekly. You see
Hmm.
it? Okay. So we are retesting on the weekly. When we go to the daily, oh, let me draw this out real quick. I'm gonna draw this on the weekly so we can see the lines of it too. Okay. So we have a weekly uptrend. Let me see if I can change this to orange. So we know that this line is the weekly. Okay. That is the weekly trend right now.
Hmm.
All you're seeing on the daily is this pullback. There's just more candlesticks within inside of this pullback because each candlestick forms within every 24 hours now. So all we're looking at is data. And as you can
Okay.
clearly see, we are in a downtrend on the daily. Let me change this to, try to change it to blue. That may not work.
Yeah, and another thing too is going under the 4 hour, the daily, underneath that line, and it's almost like about to go underneath the other daily line too.
So, right, you talking about going to touch it up here?
Yeah, it so it broke down, it broke it and went down, then it came back up, and now it's gonna go back down. So I mean, like,
Essentially,
from me
right?
looking
That's
at
the
that,
idea.
it's gonna, yeah,
Yes, it could, right? It could stop right here. Price could, bounce and stop right here and then come back down. Or
yeah,
don't be surprised if it continues.
right,
And the reason why it can continue is because if we go look at the weekly structure, it may want to go create a new higher high. because it's in a weekly uptrend. The bigger the time frame, the more respected the time frame is, if that makes sense. The better the opportunity or the chance that it's actually going to continue or go that direction.
Was this the one that
This is the trade we took.
uh yeah, but you remember on the video I couldn't make it out how you was talking about one of the trades or one of the pairs. You said something about the history of it, like you couldn't see it
Okay,
because it was either so far
this
high
may
or
be
so far low.
okay. I'm sorry.
No, it was just about the history of one of those pairs, and you was trying to talk about it. So you're like, we never know, like whether it's gonna continue going up, or it could be like going to go back down because we can't see it. Uh,
Yes, this may be that pair that I was talking about.
okay,
Yeah, but what I'm trying to get you to understand now is this weekly. And the reason why we took this trade is because we are in a weekly uptrend, which I haven't had you take these yet, if that makes sense. Uh, so we're in a weekly uptrend, but you can see we are in a daily downtrend. Right here's your uh, lower high, or actually, hold on, let me see. Let me see if I got this right. I don't think I got this right. Yes, I do. Okay, here's your lower low, which barely broke below it, as you can see it. So I'm gonna go
yeah.
ahead and circle this for training purposes. Obviously, I'll just take it off my chart when I'm done.
So that's the new one,
This is the daily,
the new low for the daily.
the lower low for the daily. So we
Oh,
are
okay,
in a, this is our lower high on the daily, and this is our lower low for the weekly, the circles. Does that make sense? So we are
hmm
in, what I was telling you was weekly uptrend, but we are in a daily downtrend. Before I was telling you don't take a trade if the daily and the 4 hour doesn't match up. Now we're adding the next level of it where we're counter trend trading the daily, but we are trading with the trend on the weekly. And I'm
okay.
and I'm recording I'm recording all this so you can refer back to this this video if you have any questions later on. But do you get that? Do you understand that?
Yeah, so because whenever you say the counter, you're going off of whatever the weekly's doing. That's supposed to be countering off of, or the daily's supposed to be counting off of what the weekly's doing, and then
Well,
that
the
means
yes, so the daily is a counter, right? It's going opposite as far as market structure. It is opposite. It's in a downtrend, and the weekly's in an
okay,
uptrend. That's what I mean by the counter. It's a counter trend on the daily versus the weekly. The weekly's in an uptrend. The daily's in a downtrend,
okay,
right? But we don't take a trade unless our 4 hour matches either the weekly or the daily. And it's even better if they're all three in the same direction. That's a very strong possibility that price is going to really continue in that direction that all three of them are facing.
yeah,
That makes sense? So when we
yeah, it
go down to
does.
this 4 hour, we know because we've done the research that price is less than on the to have it to switch to a downtrend because it's not just going to make one big move to go down there, right?
Right.
So for that to happen, and I know all these colors are crazy and you can't see them right now. I'm about to back them off and put them all together. Uh, but we know once we had this trend switch on the H4, we were trading with the trend on the weekly. And that's why we were able to take this buy.
Okay.
Does that make sense?
Yeah, because since the daily it was going down, like doing a downtrend, that gives us like in the weekly it was going up.
Mm-hmm.
So
The
we're
4
gonna
hour
just go
matches
off.
the weekly.
Yeah, we're gonna see what the 4 hour is, and then we're gonna see like, okay, since the 4 hour matches the weekly, then we're just gonna go off of that.
Yes, we're gonna buy from this area of support if the 4 hour, because in order for the daily, let's go back to the daily. In order for the daily's in a downtrend. In order for the daily to switch to an uptrend, the H4 has to go to an uptrend because it's a lower time frame. All these candlesticks form before the daily sets up, right? So we have
Mhm.
to have a shift of structure on the H4 in order to rise above this lower high on the daily. So in the next few days, price may close up here on the daily. Now we've had a shift of structure again, and now we're in a daily uptrend. But in order for that to happen, the 4 hour will switch. In order for the 4 hour to switch to an uptrend, a lot of times the 2 hour had to, or the 1 hour, right?
Yeah.
Does that make sense? So when I what you're seeing is I'm gonna back all these off where you can see it a little bit better. Oops, let me zoom in a little bit more so I can pull it. So this pullback was a daily downtrend. All it is a weekly retest. Can you see that?
Yeah. Now I can.
Yeah. So now you're seeing that's what you're seeing on the daily. Okay. Let me get to the 4 hour. I'll pull this off real quick.
And with that 4 hour, it didn't even look like it was about to do it again. But because I seen a couple of red candlesticks, and then I seen it go back green,
Yeah, and
like it
then
retested.
that's yes, that's gonna happen where price. Hold on, let me pull all this up so we can see it. Price, it's not gonna. Price is never just a lot of. I ain't gonna say never, but price isn't just gonna take off in the direction you want it to go in. It's just a straight shot. Price is
Yeah.
gonna fluctuate back and forth until it gets to where you want to go or doesn't want to go.
Yeah.
You know what I'm saying? So this is what you're seeing on the H4. Now you see how they all correlate together.
Hmm.
You see why the correlation, the weekly's in an uptrend, the daily's in a downtrend, the H4 is in an uptrend. We're buying it because the H4 and the weekly are in the same, uh, they're in the same direction. And that's why we bought that. Okay.
Okay.
Now, that is a counter trend trade on the daily, but it is a trend. We're trading trend on the weekly. How that can confuse them, but you know, to me, confusing anymore. For you, it may.
I mean, it was. Yeah, it definitely was. Like a couple of days ago when you was trying to explain it. But now, like the more I talk about it, and the more we go over it and stuff, I'm like, okay. So basically, it's like I'm not trying to, let's say, like it's basically like whatever the 4 hour is, that's what we're gonna go by. You know
Yeah,
what I'm saying? But
what it sounded like before. Now, at the end of the day, the 4 hour, the direction that is in, we will trade with that trend, but the daily or the weekly or both have to match up with the H4 with other influences, right? Meaning
yeah.
other, like we took this trade, the daily is above our area of interest. We're above. The H4 we're above. The H4 we got a rejection candlestick. You get what I'm saying? Once we got that rejection candlestick, we were looking to buy within 10 pips of the open of that candle, which we both did. You said you placed a buy limit, and I also placed a buy limit. Price came back down, wicked our area, and it shot up.
Hmm.
But now, like I told you, because we haven't touched this blue zone, which is our daily zone, which is the zone that we really the zone that really matters, that is touched that zone yet. If you can tell, I've re-entered. I got out up here. What we're having is we're having a retest, or we've had a retest here. And I'm looking for price to go up here. Right now, personally, my only concern in this trade, my only concern is you can see these two candlesticks kind of close below this area. We always want to
Yeah.
buy above. When I placed my trade, we were, as you can see, above, but price kind of fell below. But hopefully, this next candle closes above, which will confirm that it still wants to go up, if that makes sense as well. But we got our
Mm,
rejection candlestick, which was green. I put my box, 10 pip box, and we got in with inside of those 10 pips. And I'm looking to take it to the next H4 zone. Hopefully, we
okay.
can get all the way up there in that H4 zone.
Because I'm trying to understand, like, you can, because at first, whenever we was going over these things and stuff, I thought that you always had to like do a trade or something like that whenever it was like touching all the way down to the daily and the H4. But I didn't know like you could do like how you're doing right now,
Yes,
where it is at the H4
yes,
part, and then you
yes,
can make one.
yes, sir. This part right here, it's called scaling in, where
Okay.
this is a higher probability setup. So, like I said, let's refer it to basketball. This is a layup, or this is a free throw, or a jump shot,
Hmm.
close mid range, pull up, jump shot, where this may be a 3 pointer. The probability is there. We're open, right? We're open, but
Hmm.
it's still a higher risk trade because technically we're in the middle of the zone. And that's why it's so
Okay.
important that we have our H4 area of interest and that we're above where we can possibly take it to the next level.
Okay.
Yep, those are confluence. We're above this area. We've rejected long wicks. What long wicks means is uh, there's a lot of buyers, right? Sellers came in, and a lot of buyers, more buyers than sellers, right? Those are wicks. We like seeing wicks because that tells us that price is really slowing down, kind of like it is down here. See all these wicks where price shot down and then they pull back, shot down and pull back. That's a sign, that's a confluence that price wants to go up because it can't break this area. It's trying to, but it couldn't, which is what I'm
Right.
hoping these are, which it happened up here. As you can see the wicks. You can see wicks with inside of here. You see this long wick. You see all these wicks over here when price went up. That's a confluence, a sign that says, hey, there's a probability that price wants to go up from here.
Okay.
Yep. Okay. So now, with all that being said, I'm gonna go look at this other trade that I'm in, so you can get a idea of that. And I can delete all that later. All right.
Yeah. When you get a second, can you like kind of explain whenever you did you hit I think it was to set the stop loss and to put the pips in, and then you said something, you're like, yeah, I'm gonna do like a 1 to 3, and then you type something in somewhere
Okay.
on the
So you talking
on that
about on
thing.
Trading View or on Trade Locker?
um I guess we could do trading view.
Trading View. So on
Yeah,
Trading
because that's
View,
the one where I got confused.
yeah. So on this Trading View, there is this tool that's over. It's over to the side. I made it my favorites. My favorites are down here. That way I don't have to go search all this over here. But it
Yeah.
is. Let me see. Right here. It's called projections, long position or short position. So if I'm looking to buy it, I just click. That's a long position. That's the one we need. I just click it and then I double click it and then I can put in the entry price, which is right here, right? A lot of times what I'll do is I'll just drag it over here
Hmm.
and then I'll put a stop loss. And my stop
Hmm.
loss, a lot of times, I think I put a 25 pip stop loss, which is, remember, you got to put 250. right? 250 micro pips, which is a 20
Okay.
pips or 25 pip stop loss. That's what I did over here. And all I'm looking at, JP, my rules are if I have to take a trade and it has a stop loss of 50 pips or more, it's not a trade I want to take. So the idea is to have your stop loss below the last higher low, which was right here, or the last uh, lower high, whichever direction that you're in. If you can get your stop loss, which we were able to on this trade, we had our stop loss below the wicks, the everything. And as you can see, there was a point in time where we were negative and price came all the way down here and almost stopped us out, but we were clear of it. That's how I measure my pips. So you can see as this is highlighted, it's called risk to reward, our
Hmm.
ratio. It's a 2.19, right? Or if I go a 2 to 1, that means that I'm willing to risk, let's say, $50 to make $100. Or if I go a 3 to 1, right? Oh, wrong. Hold on. If I go a 3 to 1,
Where you just did that at, what is it called? Is that the ticks
when I
or
double
like
click it,
what?
these over here,
Yeah,
yeah, yes, they call
yeah. Because
ticks,
I see
pips. It's
profit
all the
level,
same.
huh?
It's essentially all the same in forex. Ticks and pips. It's essentially these are the ticks, right? So 250
Mhm.
ticks are 25 pips.
So are you doing that underneath where it says profit level?
Yes. So profit right
Okay.
here, and my stop loss is right here. So it automatically, rather than having to go over here and see where that number is and count it all out, rather than having to count, my entry is 1.60833. So if I want a 25 pip stop loss, rather than counting down to five, doing the math to 1.6583, it just makes it easy
Hmm.
for you, and it does it for you, if that makes sense.
Okay.
Yeah.
And that you said something about the 2 to 1 or 3 to 1. You just do that not on that screen, but you do it with the just kind of like press clicking it and measuring it, moving it
Yeah, so
to.
you can click it and move it, and the
Okay.
idea is the idea on how you get whether the trade is worth taking. And I'll
Hmm.
use let me back off this trade right here. So I've scaled in. This trade was worth taking to me because I was able to get at least a 2 to 1. If you can't get at least a 2 to 1, JP, it's not worth taking. You want a 2 to 1 or greater, right? Because that means I'm going to risk one to make two. That's what your risk to reward is, right? And that's how you
Mm.
go. If I got a 1 to 2 on every trade, I have to be 50% accurate.
Mm.
If I aim for a 1 to 3, I can be about 33% accurate. I say 30.
Yeah.
I think it's 3%. But I mean, on my trade, even though I'm only 33% accurate if I aim for a 1 to 3 every time, or I only got to be
Okay.
50% accurate. What I try to aim for is at least a 2.5. Right? This trade was a 2.72. I had my stop loss at a 1 to 3, but I'm like, no, let me go ahead and take my profits. Start the year off right. Let me take my profits.
Yeah.
And now I'm looking to scale in right here is what's happening.
'Cause I think mine was it said I'm looking at it right now. It says risk reward ratio. It says 3.11.
Okay, what was your stop loss?
It
What was the ticks
was
on it?
it said 20.0.
20.0. On the
I
are
think
you
it was
you on trading view?
yeah.
So under stop loss, if you double click it on ticks, it says what again?
Right now it's stop loss. Hold on, let me see.
Yeah, yeah, stop loss.
For the ticks I had 200.
200. Okay, that's a 20 pip stop loss,
Yeah.
which is
Yep.
the way we trade is a very tight stop loss.
Okay.
Now with Euro CAD, I I was looking to do a 20 pip stop loss because pair to pair. And honestly, I personally don't know why. And what I mean by it varies. This, see how big this gap is with a Euro CAD. Like if I go to GBP JPY, let me find it. There it is. And I use the position tool and I put a 20 pip stop loss. Look how tight that is.
Wow.
Yeah, so it all depends on the pair that you're trading. So that's why I say no more than 50 pips, right? Usually that's about what I do. And that's pretty close to this one. Actually, that one looks even better. But it has something to do with the volatility of that pair. GBP, JPY is a very volatile pair. And that's why it is the way it is, if that makes sense.
And you said you wanted a stop loss below the last
The last, so
lower
in this
low.
situation, it was the last uh, higher low, right? Because we
Or
created
low.
a new. Hold on, let me make sure I'm telling you right. Yes, we created a new higher high right here, so it made this our higher low. So my stop loss was below this area, even the wicks. Now, with that being said, this pair, like I'm not for it to be below the last higher low, I would have to have a stop loss, right? That's crazy.
Yeah,
You get
yeah.
what I'm saying? So you just
Mm-hmm.
have to. I just went with the same stop loss I had last time. That's just a part of the game. You get what I'm saying?
Okay.
How big do I
Yeah.
want my stop to be? And it's a part of the game, but it's also what I can gain out of it. So from this H4 level to the next H4 level, there's a 50 pip, right? 50, or 500 ticks, 50 pips, whatever you want to call it, gap. So I know for a fact I can't go no lower than 250 because I have to have at least a 2 to 1.
Okay.
Yep, in order for me to take a trade. We have to. So and that's good. That's a good question because that's what I was going to ask you. What was your stop loss on that? Because that matters. Because if you're here's another thing that matters. Regardless of your stop loss, the amount that you risk per trade has to be the same too. And the reason
Okay.
why,
So like,
go ahead. Damn, I
so
keep
like
knocking my
two,
phone.
say like 2%, not 2%, but like 3% of your whatever you have or whatever or something like that. That's what you have to continuously every time,
Yes,
every time.
yes, and the
Okay.
reason why is because let's say you have a 1 to 3, right, and we're risking 1%. Let's just make it easy. We're risking 1%, which is very hard to do with a small account. You'll make gains very slowly, but at the end of the day,
Mm-hmm.
that's what the professionals tell you to take, or whatever the case may be. Anyway, that's a whole nother story. So let's say you have let's use 10%. Let's say you have $100 and you're risking
Okay.
10% per trade. You lose the first two trades. That puts you at $80, right?
Mm-hmm.
Now, if you on that third trade because you know you're 30% accurate, right? I got a win coming, right? Ideally, I got a win coming. If you're at a 1 to 3, you're gonna make $30, okay? Which means you're gonna
Mm-hmm.
be up $10 on the overall account. So you've made all your money back that you've lost plus 10,
Mm-hmm.
and you're only 30% accurate. That's how we make money over time. It's a
Mm,
probability game.
okay.
No different than what they're doing with your 401k at work or anything like that. Only difference is you're allowing them to risk your money. Now it's in different entities and different things like that, stocks and different things like that. But at the end of the day, it's a probability. So as long as you make more than you lose, which is going to happen no matter what level you're at, whether it's Wall Street, whether it's retail traders, it doesn't matter. Business is the same way. Walmart loses money, right? But what's the probability that we're going to make this back and be able to scale it based off the employees and our overhead and all that type of stuff? This is a business. This is how we have to treat it. But you can go if
Okay.
you're aiming for 1 to 3, you can make money. Now, let's say you have that $100, you're risking 10%, and you're aiming for 1 to 3. The first 2 trades, you are down to $80, right? And you're like, man, you get frantic, you get pantic, whatever you want to say. Now you're like, all right, I'm gonna risk 10% of the 80. Okay, so now you're risking $8. But let's say you win. That means that you're only gonna make $24. Now, you would still be up, right? In that scenario, you're still up because you made $24. You made $4, right? Now, if you lost 3 trades in a row, you wouldn't be up. You'd be, uh, I think around break even. Versus if you just risk the same percentage overall, you're going to be up even greater because you have the same risk. That is a rule. Now, I've had situations where I've risked 10% per trade and I've lost the first 5 trades, JP. And it becomes very like, oh, shoot, what did I do? You know what I'm saying? Now
Yeah.
you done
Yeah.
blew half your count on your first 5 trades. And you got to trust
Mhm.
your strategy and your system and yourself that you're going to make that back. You get what I'm saying? And that's
Yeah.
where people don't have a system, though, where they blow it. They're risking 10% on this trade, 5% on the next, 3% on the next. They don't know what their win rate is. They don't have an idea of what the risk to reward is. This whole system matters. This stuff right here matters probably, if not more than you knowing the shifts of structure. Because this statistics and this like going over the risk to reward, you can use this anywhere in life. You could use this on your paycheck.
Yeah.
You know what I'm saying? Like you can use this with your bills. Everything comes down to percentages. If you're wanting to save money and you know your bills are 70% of your paycheck, well, you got 30% that you can play with. Whether I want to save the whole 30%, whether I want to invest 15%, save 15%, or whether I want to donate 10%, save 10%. You know what I'm saying? But if you don't know what you
Yeah.
have going out, coming in, you just don't have a clue and you're just floating through life. Trading would never work for you, first of all. Secondly, you're not going to know where all your money is if it's based off your job either. So it's very
Yeah.
important that you develop a system and try to aim for a 2 to 1 or greater. And as you're taking these trades, it's very important while you're demo trading. It's very important. And I'm gonna say this in a second, but it's very important that you document your win rate, right? So you shot 100 shots and I missed 40 of them. You know what I'm saying? Like you're 60%. Or I
So
shot a
with
hundred shots and I missed 80 of them. You're 20%. Which means if you're a 20% trader, first of all, you need to get something dialed in on the trades that you're taking because it should be higher than that based off my system. But secondly, if you're a 20% trader, now you have to aim for a 1 to 4 in order to make money. See how that goes hand in hand?
yeah.
Yeah.
So with you being so say like for instance with me being like 2 to 1, is that like uh 20%, or is it like when you say 2 to 1? Because I'm
When I
trying to
say when I
still trying to.
say no, when I say a 2 to 1, that means again you are risking a certain amount to gain a certain amount. So if you're risking $10, you have to at least aim for $20 reward.
Oh, you have to double it.
Yes, or you have to triple it. Right, a 1 to 3 is tripling it. A 1 to 4 is quadrupling it. Yeah, it's just the term that we use. I'm risking this one that I'm risking, and this one this time is $50. I have to aim for $100 or $150 or $200.
So 1 to 2.
Yeah, yeah. 1 to 2 is gonna you have to, and you can this a 2 means at least percent correct on your trade.
Mm.
You go and you're gonna have where you're a percent trader, you're taking the same setups and you only 40% accurate. it's very important that you have a system, which you do, that you can aim for 1 to 3 or 1 to 2.5 or 1 to even 4 sometimes, depending on how big our levels are. And you have a system with us being swing traders, you have a system that allows you to get those uh, higher pushes and swings.
So for me starting off, drill, like what would be, because you said a 2 to 1 or greater,
Yeah.
what would be somewhere where to be like, don't, even if you're, I don't care who you are, or even if where I'm at right now,
hmm
don't go above that.
I would
Just
right now. I wouldn't go above a 1 to 4. I would stick
okay.
in between a 1 to 2 and a 1 to 3, so you can see, because you got to build data. You have to build your own data, right? You have to build like your statistics. And the reason why I say a 1 to 4 don't go above that is because a 1 to 4 is harder to hit. It is harder because it's farther away. So with that being said, you may be up a 1 to 3, and you let price pull all the way back down and stop you out. It's happened. I've had it happen. So I've been 3 and I not move my stop loss or take any profits. Not dumb I felt. You know what I'm saying? Like,
Yeah.
it's just being real. So I wouldn't aim for no more than a 1 to 4, but you got to have a system. So typically, this is what I do. If I'm aiming for a 1 to 2.5 or a 1 to 3, when my trade gets to a 1 to 2, I put my stop loss at break even. Worst case scenario, I won't make anything, but I'm not risking much. You get what I'm saying? I'm not risking anything once that happens. Now I'm risking for price to come back down and stop me out of break even, and that's happened too, and then shoot off in my direction. That's just a part of the game, man. Price is going to fluctuate. But whatever
Okay.
system, the system I'm giving you, it has to be the same every single time. It has to.
So does that 1 to 2 and 1 to 3, is that like 1 out of 20% and like 1 out of 30%, or is that
No, there's so on that there's no there's are you meaning to hit that?
no? I just mean like the regular like 1 to 2 or 1 to 3. Like you have a 30%. You need to get at least 30% out of this one or
No,
twenty
okay. So
percent.
I know what you're referring to. You're referring to the percentages. The percentage, when I say you have to be a 30% trader in order to have it, like if you're a one, like you trade a 1 to 3, right? I'm risking this one to gain three. This is my risk.
Okay.
You only have to be 30% accurate on your trades. Meaning, if I take 10 trades, I only got to hit three of them and I still make money. That's what I mean by that percentage. Okay, so if
Okay.
you break it down, a 1 to 2. If I have a 1 to 2, which means I'm risking $50 to make $100, or 1,000 to make 2,000, or whatever your account size is, right? A 1 to 2, I have to be 50% accurate on that. And the reason why you have to be 50% accurate, because if I have $100 account and I lose 5 trades in a row, that makes me, I got $50 left. And if I win the next 5, right? Uh, what is that? That'd be $100. Now your account is at 150. Does that make sense? I won 5, I lost 5. I still made money. My
Yeah.
account size at the end of the day is $150.
Yeah.
But if you're at a 1 to 2 and you lose 5 trades, you lose 6 trades in a row, that's $60. Or that puts you at $40. I'm sorry. You lost 60. That puts you at $40. But you win the next 4, you're still negative because you're only back at $80.
Okay.
Yeah. So that's why, like, okay, I'm only a 40% trader. That means if I'm only 40% right at the time, my risk to reward has to be greater than a 1 to 2.
Mm.
Yeah, that's what that means. And like I said, I'm recording this, and you can go back and look at it or search some videos on YouTube that may explain it a little bit better and break it down a little more detailed. But that has to be a part of your system.
Okay.
Yeah.
So basically, you're saying that there is a limit that you have to take every time whenever you're trying to do as far as like trading. Like there's a certain amount of trades that you can take, just to be like, I guess, like, consistent with your trading and everything. Because if you take two more, or if you take something else or whatever, you'll like mess it up.
Yeah, you can blow your account, right? Depending
Yeah.
on but it also depends on what you're risking per trade. I'm just using, because it's easy math, I'm using 10% per trade when I
Yeah.
was explaining
Okay.
that, just because it's easy math. Uh, but yeah, so for example, if I'm using, let's say I have $100 and I'm risking 10% per trade, that means I can only lose 10 trades in a row before I blow my account.
Yeah.
Or if I have
Okay.
$100 and I'm risking 1%, you get what I'm saying? Like, now you have more trades that you can lose at, but at the same time, you still have to aim depending on your win rate, right? How successful you are, right? We know Stephen Curry shoots 40% from the three. So we know for a fact, because of that data, Stephen Curry is going to make 4 out of the 10 he shoots. Hall of Famer,
Hmm. Yeah.
right? What is our Hall of Fame? What is our Hall of Fame? And it all comes down to, what percentage do we shoot at? Are we shooting, when we take a shot at the market? Are we shooting at 50%? We shooting at 40%? We shooting at 20? We shooting at 10? Right? That's why I said,
Mhm.
you take these trades, you trade on demo, take the next trades. How many did you win? How many did you lose? That gives us our percentage. You take another 10. You add all those 20 up. What's my win rate? Then all those 30. What's my win rate? And then we can collect that data and know where to adjust in order to make you money.
Okay.
Yeah.
That makes sense.
It makes sense?
Yeah.
Okay. Okay, good. All right, real quick, I'm going to go to this next trade here. And this is a scale in trade as well. This is GBP NZD. This is essentially, I think, the same. Yes, it's the same idea and setup as the Euro CAD. As you can see on the weekly, we are in a weekly uptrend. Can you see how clear that is?
Hmm.
Yeah, we're in a week. I was trying to mark it. We're in a weekly uptrend. Here's our higher low. Here's our higher high. But we are in a daily downtrend. You can see where price broke below, and it has never broke above or below this area, so that classifies as still in a daily downtrend. But all we did was we retested on the weekly. Okay. Now when we go to the H4, we're in an H4 uptrend. Right here is where I should have taken the trade. But because we haven't touched this area of interest yet, I'm looking to scale in and get this buy, is what happened. So we're above the H4. We're in the same direction as the weekly. We have a pullback, confirmation pullback with the Hikinachi candlesticks. Then we have a rejection candle. So I was able to get in with that. Note, before we had this rejection candlestick, JP,
Hmm.
or before we had a rejection candlestick, notice the H4 closed below the area of interest. I did not get in then because price was below, because we used the Hikinachi candlesticks to confirm. But even on the regular candlesticks, price had fell below. I waited until price broke back above before I took this trade to
So that
confirm.
discipline.
Yeah.
Yeah.
So when we're above, we buy. When we're below, we sell. That's the idea. So we were once we broke above, that's when I bought. So my plan and my goal is, hopefully price continues up to this area and really, you know, maybe retest, create a new higher high or something like that. I don't know. But price may not, and it may, who knows. But
Yeah.
all I can
I
do is
mean,
take all my confluences and put them together and trade with what I see.
yeah. It looked like you went with all your checklists. So
Yeah, most definitely. Every single
you
time.
know.
Every single time. Let me go. I'll go to this one. I sent you a video on this one. This is the move that I was looking for this to have. The weekly's in a downtrend, the daily's in a downtrend. The H4 was in an uptrend. I was waiting on a shift of structure on the H4, retest, sell. We never got it, so I didn't take the trade. I don't assume. I don't predict. I take what
Right.
the market gives me. That you don't want to get caught up in predicting the market. We
Yeah.
don't. We don't. We don't do that. We take the signs and the probabilities. It's at the end of the day, it's all a prediction. Don't get me wrong, but we take our probabilities and our setups and we trade those every single time. And that's why I didn't take that trade. Uh, Euro USD. I didn't take this trade last week. Uh, as I think I put in my video. I didn't take dog outside. I didn't take this trade because price continued. I was waiting for it to have a shift of structure on the H4, and I didn't buy it either, JP. So I was waiting for the
Mm.
shift of structure on the H4, but price kept going up. And the reason why I didn't buy it is because when we are below, which price was, we were
We sell.
below, we don't
Yeah.
buy, we sell.
Yeah.
You know what I'm saying? So it's telling me not to take the trade. And
And
that's
we
how simple at the end of the day this is. You follow your rules and you that's it.
when you say below, you mean that the one on the top, right? The
Yeah, so
H4 up there. Yeah.
below on the
Okay.
daily.
All right.
Notice how wicks and we just
Mm-hmm.
right in uh look to possibly eyes off this. Look to buy because really on this area, it's right there.
Right
I got to
there.
touch.
Yeah.
I got to touch the price to come first. If it doesn't, all down here at our before we buy,
Yeah.
which is very possible because look at the H4. It's just been pushing so hard that you may get a pullback all the way to this area. So that's when I said that video. That's what I meant by we are. Here's the thing: you are always counter trend trading on some sort of time frame, technically. But what I meant was for you this week is you can trade with the trend on the weekly, and this is how you do it. That's what I meant. But if you notice, regardless of what time frame we were on, everything is the same. The structure, you know what I'm saying? Like everything is essentially
Yeah.
the same.
Sure.
Yeah. Well, my guy, let me stop this real quick. Stop presenting. But yeah, bro, like that's is what it is, man. Like I said, if you got any questions, sometimes I'll be slow getting back to you. But if you got any questions, just holler at me, and hopefully you're starting to understand it more.
Actually, one more. Did you say the stop loss below your higher low or the lower low?
Yes,
Right.
that's ideal, right? That's
Idea.
ideal. Now, if you can't get that, like I wasn't able to get it on my scale in, then do I went 25 pips. You're just gonna kind of eyeball it. Like do I see price pulling back this far? Probably not. You know what I'm saying? And then
Yeah.
get 50 pips in profit based before it hits the next area of interest. A lot of times when it hits that next area of interest, that's when you're going to have a pullback or a reaction to the market. Well, we want to take it all the way up to that point. And once we get to that point, we want to get out because we know for a fact that price can fall from that area because
Okay.
it has in the past. You know what I'm saying? This is
Yeah.
where it's reacted in the past. I'm going to do what the market is telling me. I'm going to just go off what it's showing me.
Cause some of them, like on the charts, I see. I think I had to like zoom in or zoom out
Mm.
sometimes because
Mm-hmm.
I can't see like where I should be putting the daily lines
Yep.
or the forex lines. So I learned that like sometimes I gotta zoom in or zoom out, but
Yep.
like I'm definitely trying to get better at putting the lines, the daily and the 4 hours.
Yeah.
So
Yeah.
yeah.
Most definitely, and that just it comes with time. Like there's been, and this was last year, JP. I was taking trades just last year. Like, why did I lose the trade? And I go back and look and go, oh, that's because there's a level there that I overlooked and I didn't analyze well enough. Uh, That's why I took a loss. That's why the market reacted from there, and it went against me or whatever the case may be.
Yeah.
So yeah, it that takes time in the seat. You know what I'm
Yeah.
saying? Just time in the seat. You'll get it. Uh, but my
The
last recommendation for you is, and I don't know what your financial situation is. If you have $100 here in the next month when you get comfortable that you can put into the market and know like I ain't getting this money back. That's gonna be the mindset when you put it in there. I'm not getting this money
yeah,
back because I'm learning I'm gonna blow it. But the reason why I tell you to do that is because demo trading, you have no emotions involved. We are emotional
right,
creatures. For whatever reason, we always tend to react off emotion, right? Based off how we feel. So, and that's why 70% of America is fat and overweight. Just being
right.
real. Because we are emotional. We're too lazy to go work out because it hurts. It's a feeling. You know what I'm saying? Because we don't want to feel that
Yeah.
way. We don't want to be sore or whatever the case may be. We don't go work
Mhm.
out. And because food makes us feel good, we tend to eat the sweets because, we like it.
Yeah.
You know what I'm saying? Like,
We don't want to put the work in, but we want the reward.
yes. And because of that, because we are emotional creatures and we do stuff like that, I want you to put $100 in the market whenever you're able to and trade that $100 so you get those emotions and you learn to channel those emotions. Once you learn the strategy, which for the most part you just had your first winning trade yesterday. Uh, Now it becomes about managing emotion. It's about 80% psychological. Once I learned the strategy, now it becomes about managing you. Who is JP? Is JP an over risker? Does he not take enough risk? What is it? You know what I'm saying?
Yeah.
So that's why I say start with $100 and see how you emotionally feel, and then document it. Hey, I didn't take this trade because I lost the first two trades and I risked too much, and then I won it. You know what I'm saying? I won the trade. Now I wish I would have taken. You
Yeah.
got to just figure out who you are as a person.
Where would I put that in? Do I put it in the trade locker or
Yeah. So essentially, the broker that you're using, I can't remember. Are you using Gates FX?
I think so. It
Yeah.
was the
So you
last
would
one
just
that you
open a
sent
live
to.
account with them, and you
Oh,
would you would
okay.
put it on
Okay.
that platform there. Yep. You can deposit on
All
that
right.
platform.
Sure.
Yeah.
Right.
And then most of these, yeah, you can just put it on there. Yep.
It probably would it just go through to trade locker and then I can just
Yeah, so
trade
it'll
off of that.
go into your back office, and then you'll transfer it from your wallet in your back office, right, to your trade locker, your live account. Yeah, and that's something
Okay.
when once you get to that point, we can get on Zoom and we can
Yeah.
walk through it together if we have to.
Okay.
Yep.
Yeah. Let me just get some more practice in
Yeah,
and
most definitely.
staying disciplined about it. So yeah.
Yep, I got you, JP.
Mm.
Well, all right, man. You got any questions, man? Just holler at me.
All right. Appreciate you,
Hey, no
man.
problem. We'll talk to you later.
Yep.
All right.